Good morning, this is Anka Metcalf with TradeOutLoud.com. Welcome to the pre-market game plan for the major futures indices, gold and oil for today, October 10th. It is Tuesday, 9:04 a.m. Eastern Time. We're going to begin with the mini Dow Industrial Average. After a very choppy trading session yesterday, we set a new low with a new support level at 22,687 towards the end of the trading session. And the overnight trading session saw that support level as a bounce area for all of the indices throughout the board. So far in the Asian session, we saw an ascent in price, challenging the prior high at 750. And the London session came with a very shallow pullback at 4 a.m. at 724. And a rally that is still continuing and still going out right now. 22,769, new all-time high for the mini Dow, recorded again in the pre-market session. Keeping in mind pullbacks into the 750, this is what we will be watching. Pullbacks in the 750 will be buyable, so we are about 16 points away. Further price projections are into 22,000. And obviously target level number one is going to be 780 to 785. The second target area is going to be 800, and then we have a tradable void which is wider all the way to 863, which makes it about 100 point. Keep in mind that the Dow is already up 55 points on the day, 0.24%. It is one of the strongest minis and continues to be the strongest mini, leading price and leading all the other minis at this point. Let's take a look at the S&P 500, which is up 0.19%, only up 4 points on the day. It is the one that is lagging. It is the one that broke the support level from last Friday's at 2541. It created a new low in the New York trading session, 2539, and from this point, it left a shadow, it left a bottoming tail, and price got bought all the way into where we're trading right now, 2548, 2549. This is the area right now. We're trading into this cluster of resistance, and this is nothing new. This is exactly how S&P has been trading the weeks before, so it has been very, very challenging, and it has been ranging for some time before the breakout, ranging before the breakout. So the breakout area is going to be seen at 2550. Further projection areas and further targets are 2556 and 2567 area. So keep it in mind for the S&P, we need a breakout over 50. Into the 52 area and then come back into the 50 area for another buy. So this is the game plan for the S&P. So keep it in mind, let it break out, let it come back, and then we can leg into this trade. All right, let's move on to Nasdaq. And Nasdaq so far trying to challenge prior highs at 60.84. It has not yet created a new all-time high yesterday in yesterday's trading session with flurry to the downside. We created a new low at 60.54, 60.55, from which it bounced in the overnight trading session. Very shallow pullback in the London session into the 60.67 area, from which it started to rally into the 60.80 area. This is a big target area, is also into resistance area, and further targets are 60.100 and 60.126 moving forward. Keep in mind that we are looking for a pullback here at least into the 60.70 area, so it is 9 points to the downside. So when the volatility is going to come at the beginning of the New York trading session, this is what we're going to be looking for, or at least a consolidation of about 7 to 10 points at the 60.80 area. So most likely it's going to create this flurry either to the 90 or either to the 70. So this is what we're expecting from the open. Let's take a look at Russell. And Russell is still into a very choppy range. Keep in mind that yesterday it broke the daily support level, which was set at 1504. You can see that it had a flurry to 1502 after creating a new high at 1508 in yesterday's New York trading session right at the open. So it just stretched the support resistance levels, and now price trading right in the middle of that range. So obviously this is not a good trade that would enable a good risk to reward ratio. Keep in mind that we need to break off this cluster at 1450 in order to continue higher. So this one is not setting up the way we would have wanted. We will be monitoring as well. Let's take a look at gold, and gold is also up on the day. And gold is actually moving towards our first decision area, which is 1300. We talked about this area from the daily chart. I'm going to bring up the daily chart. So here's what we see: a huge cluster of resistance that is coming from this prior high that was set in August, and also this prior high that was set in June. If we get any kind of consolidation at this point, and if we break into the 1300 and a pullback to 1295, this is going to be the other leg in for a potential target of 320. All right, so let's move on to oil. And oil has been moving higher. We talked about it yesterday. 49.80 was the breakout area, and it happened in the overnight trading session. There's still room to continue higher into the $52. And with that being said, let's move on to the hourly chart. Breakout decision came in the London session at 3 a.m. that took the price higher into this cluster. So keep in mind, we were talking yesterday about the fact that this is a very sloppy range, that if broken, and this is the area that we saw here, the 49.50, 49.60 area. So from 49.60, it only had a target into the 49.80 area at the max. So you can see what it has done here. So after it hit this 70 area, close to the 80 target area, it pulled back in the New York trading session. Then it went back up into the 80 area, exact same area, digesting these prior highs, pull back again, consolidating here, and then in the overnight trading session, this is where exactly the breakout happened, digesting the minor resistance of 49.80, popping higher into this other cluster right here, and we do have target area at 50, 55, 50, 60 from these prior highs right here, and we still have room to continue higher into the 80 and 50.80 and $51. So for today, we will be watching one of my major watches is going to be definitely Nasdaq, and it is also going to be E-mini down. This is all for now. Thanks so much for tuning in, and for more trading ideas, make sure you follow us on our private Twitter feed.